first, all right, so let's get going talking about chapter 14. This is kind of a bit of a miscellaneous chapter. We're going to pick up some different issues here, but it's focused on corporate taxation. So the first item we have up here is this concept of acquisition of control. So, and a lot of what we're going to talk about, we're going to get into this concept of control. A lot of decisions that we're going to make in tax are going to relate to who controls an entity. So when we speak about control, I'm just going to actually pop to the next slide here. When we speak about control, we're talking about ownership of the shares that carry the right to elect a majority of the board of directors. So in other words, you own, get a pen going here, you own voting shares, or more specifically, enough voting shares that you can control the entity. Whoops. Here's where I meant to scribble that. So to elect the majority of the board of directors. So, you know, simply put, this would be greater than 50% of the voting. That's a simple way to look at control of an entity. So one of the things that we have to note here is that that control can change, right? As shares, particularly voting shares, are sold, we can have a change in who controls the company. And we're going to have certain implications of that. Now, one of the things that, you know, we talked about a company having, you know, say your business has a loss in one year and then profits in the next year, and how you can carry the losses forward so that you're not in that scenario where you lost 100,000 one year, you made 100,000 the next, and you're effectively made zero, but you're still paying tax. Well, that's one company between multiple years. What if you have two companies and one company's making money and the other one's not? We have certain rules in here to kind of help prevent those losses being merged, because unfortunately in many situations those can't be, in some they can, but we have to consider different rules when it comes into that. So sometimes people will be trying to you know, transfer a loss from a loss company to a profitable company through an acquisition. Example of this would be somebody, you know, so this is two unrelated entities, right? Two unrelated parties. Somebody goes up and says, and we're trying to sell our company, it's got a loss, and the other person buys it simply to get those losses to offset against their company that has profit. So just basically going out and buying the losses. So we got some rules in there to kind of prevent against that kind of thing, or at least I should say maybe more so to limit how often you can do that type of thing. So let's talk a little bit here more. Let's just see if there no, I don't think there's anything else more on the slideshow here. So what I'll mention about this, in this, you know, it says in the slide, the problem. So can we use these losses? So we've been talking a lot about losses of the same entity. What about a loss of another entity? And I guess the simplest way to put this is that those losses can only be can only be used. So if the profitable company buys the loss company, Those losses can only be used in the profitable entity if they are carrying on the same or similar business. So in other words, if this is a shoe store and they buy an unprofitable shoe store, oops, and continue to carry on this shoe store business, they can use those losses. But if it's a totally unrelated business, if this was equipment rental, then that's a no-go. The losses stay here and the profit stays here. Now, control of a company can change through some different scenarios, most obvious being acquisition of the shares. So one person acquires the majority of a corporation's common shares from an arm's length person. However, it can also occur through redemption of shares. So if there's a little example here, I think in the slide, it says, person A owns 60%, person B owns 40%. If all of A's shares were redeemed, that means A's shares are gone. Now B has effectively acquired control because B would now have 100%. If the 40% is all that's left, it becomes 100%. So it could be through redemption of shares as well that could change that makeup of the control of the entity. Now, one of the rules here that kicks in, when control changes, we have to have what we call a deemed year end. Now, if we take a step back here, corporations can choose a year end. So basically what happens is the first year that you file, so a corporate tax return is called a T2. And in the first year that you file, that's when you're going to decide and pick a year end date. Now, there's many different reasons why you may choose a different year end date, but it's not always going to be December 31st. So you'll set that at the beginning of the company, and generally speaking, maintain that until there's an event that causes need for a change. So one example of that would be the change in acquisition of control. So at that point in time, we have to have a firm cutoff. So if we had a company with a December 31st year end, but the controlling interest in its shares get bought on June 30th, we've got to put a hard line in the sand there and set up a new year end of June 30th. Now, why would we do this? Well, the reason we do this is because we want to have a cutoff for what was occurring under the control of the other parties versus what is happening under the control of the current parties. So that we, because there's going to be certain liability associated with that. When you have control and you're making the decisions, then there's certain liability that comes along with that. Now, with this said, you can still keep the old fiscal year. It's just that you're going to have a cutoff, have a June 30th, a little what we'd call a stub year. And then you could go right back to December 31st for the next year, right? You could go December 31st for 2020 and have a second stub year, right? You could do that if that's how you wanted to do it, or you could just continue on with a June 30th year end. Now, from a practical standpoint, often people will just try to have as few year ends as possible. So just push that to June. For accountants, we love companies that don't have a December year end, because if everybody has a December year end, everybody wants their stuff all done at the same time. So if you want to have more of your accountant's attention, then maybe have something, have a year end like June 30th and or July or something, and they can finish it up in the fall when they're less busy. So if we have this change in control and this acquisition of control, how do we handle these losses? What happens to the losses? Well, it's going to depend on the type of losses is part of that. And I noticed I actually do have a slide coming up to the topic I was talking about before, so we'll dovetail back into that. So net capital losses and allowable business investment losses, any unused carry forwards, they're using the word here, die. They expire. Losses subsequent, so after acquisition of control, cannot be carried back. So we do have a hard line in the sand here as far as what we can do. That is for net capital and ABLES, right? Allowable business investment loss, we were talking about before, our ABLES. These are rules specific to those. Over on our non-capital loss, those are the specific ones I was talking about earlier, right? Your kind of regular operating type losses, not capital in nature, everything but capital, probably the more specific way to put it. Those guys can be carried forward, subject to the restrictions that I spoke on earlier. So you must carry on a business in which losses are occurred. Well, obviously, there has to be a reasonable expectation that you could have profited. And here's the main one. Carryovers can only be applied against income generated by the same or similar line of business. Now that, leaves some opening for a little bit of gray area as to what is the definition of the same or similar. So you could see where there's an opening there to end up having some debate. But in a simple example, like shoe store buys another shoe store, maybe the one it bought is losing money, but it sees some way that they can acquire their assets, and it's going to be to some benefit, or acquire their shares, I should say, and it's going to be of some benefit and the assets along with it. But they can also take advantage of utilizing those losses. And that's the carryovers. So those are the historical losses. So that's why you could look at a company. I had a client here recently. They had a cafe, and they had losses over losses. And at a certain point, we looked at, let's see if we can sell this business, just get out of this altogether. And it seems kind of strange, but one of the benefits that we had to offer is if we could, sell to someone who is going to continue to operate a cafe under this legal entity, one of the benefits was they would have been able to use those carryover losses. So that had essentially almost a dollar value to it that you could calculate, that they would be able to operate for a period of time without having to pay any corporate tax because of these loss carryovers that they could have used. So it's not great when you're trying to sell a company and say, hey, it's doing great, it always loses money, this is good for you. However, if this person thinks that they can profit, there's some benefit here to the historical losses if they're doing something similar in the same spot. I'm not going to get there's some little specifics here for inventories and receivables and stuff. I'm not going to get too into that here, but I'll just skip through here. If there's anything, by the way, if there's any stuff that that I kind of skip by or whatever, that can signal to you that you're not going to get a big complicated question on that part of the topic or that topic. But before the midterm and before the final exam, we'll go back with a refresher of here's the things to worry about, here's the things not to worry about. But you can really match that up with your, as far as the midterm goes, kind of match that up with your assignment number 1 and your assignment number 2, and that sort of stuff. Anything that we've talked about in class or sample questions we've looked at in class, that's the kind of stuff that you can expect, and on any of the pre-recorded lectures, of course, as well. So that's a smaller topic, the first thing that we were talking about there. And as far as any big, it's not really a big number crunching topic, this stuff that I'm going to get into. It's more of a soft, short answer question, multiple choice type topic if it shows up. Now, another non-number crunching kind of soft topic that we will spend some time on here, and you can expect on the exam as well as on your assignment, is the associated company rules. Now, this has been mentioned a little bit so far. This becomes particularly important as we discuss the small business deduction. So remember when we were doing the small business deduction, we did so this is back in chapter 12, we did a list of 3 things. And one of those things was your limit. Now, normally the limit, that would be 500,000. But sometimes that would be less because we had to share our limit with associated companies. So in previous questions you guys have done, you were just told, yep, these companies are associated and they're sharing 250 each or whatever. In this case, now we're going to drill down into that and look at scenarios so that we can decide who actually is associated for purposes of the small business deduction. So we're going to learn how to figure that out. So this is going to prep you guys for questions that would be, say, short answer type scenarios where you have to analyze a situation, determine if the 2 companies are associated and why, and then what that implication is. So we're going to start out with some definitions. So the first definition is, so these are right out of the Tax Act. We want to make sure as we look at these rules, we know what these words mean. So the Tax Act defines something they refer to as a related individual. So this could be a little different than what you or I would deem as a relative or a related person. So this is a specific Income Tax Act definition. So let's have a run through who those people are. So, and of course, there's some overlap. So we have first off, we have your parents and your grandparents, as well as parents and grandparents of the taxpayer's spouse or common law partner. So that means you, as an individual, are related to your parents and your grandparents, but also what all we would call the in-laws. Here in Canada, we'd say in-laws, right? Your spouse's parents. And also note, as we've seen before, common law partner is just the same as a legal spouse. There's no difference in the eyes of the Tax Act between a legal married couple or a couple operating just under common law, cohabitating in a conjugal relationship. So no difference for that. Who else is related? Let's look at the second bullet point. So you are also related to that same spouse or your common law partner. So your husband, your wife, your partner, they are also considered to be a relative or related, as well as the spouse or common law partner's siblings and their spouses and common law partners. So you are related to your spouse, as well as your spouse's, say, brother or sister and their spouse. So we're branching out here. So you might not think of, this is kind of still under that part of this is still under that in-laws type category. So this would include something like a brother-in-law, as an example. So again, what we're doing here is just defining who's related to each other. And the reason is in tax, we have to look at the intent of transactions and the reason behind transactions. And when people are related and they have, they share that relation and that common interest as kind of like a family, then they may work together to work around the kind of the spirit, to work outside of the spirit of the taxation law. So we have to have some laws in place to make sure that they're treated the same as everybody else, so to speak, as best possible. So our next one up is your siblings. So your brother, your sister, as well as the spouses or common law partners of the siblings. So this would be the same, same kind of thing I would call that. So my sister's husband, brother-in-law in that direction would also be included here, and as well my sister. Now this is related. When we get to that associated, that's a whole different thing. Associated is between companies. Related here, we're talking about right now as individuals. And also, of course, your children. I am related to my kids. Also, if your kids are adopted or born outside of marriage, that makes no difference. So same thing. Also included in here is if your spouse or common law partner has children, they would be included as well. If they're not your children together, so to speak, or you weren't the blood parent or whatever you want to call it. So it's a pretty wide web that's included here under related. You will notice, though, there's some here that aren't included. So an example, a lot of people would say that you are related to a cousin, or you're related to your aunt or uncle. So your aunt, your uncle, your cousin, those folks, for this purpose, they're not considered related. So that was individuals, right? Actual humans, if you will. We can also have related corporations. So how are corporations related? Well, here's an example. A corporation is related to the person who controls it. So in other words, if you own greater than 50% of the votes, through your common shares, then that's going to make you as an individual and your corporation related. Also, two corporations can be related to each other if they are controlled by the same person. So I have two corporations. They would be related to each other if I controlled them both. So related individuals, related corporations. Again, for this purpose, when we say control, this is going to mean more than 50% of the fair market value or more than 50% of the voting shares. So when you get into these examples and when you're doing questions, it'll be very obviously laid out. This person has this percentage, this person has that. So you don't have to get in any farther than that for purposes of these rules. There's a couple more definitions here. So we're just kind of, setting the table here for all these words that we're going to be using. So related individuals, related corporations, who are they? What is control? Another definition that we have here that's going to come into play is this word group. So a group is not a very high bar to reach. This is simply two or more persons who own shares in a corporation. So the percentage is not relevant. All you have to be is two or more people and you own shares in the same corporation. That makes you a group. You'll also hear the term specified class. So if we're talking about shares of a specified class, we're usually talking about something like preferred shares, non-voting, something that pays a dividend, almost similar to debt. These deeming rules, we'll come back to that. That's just kind of one more easy layer afterwards, but we'll come back around to that slide. I'll pull back to that as we're kind of mentioning, as we're kind of looking at some of the examples. So let's get into the rules themselves. So we've kind of set the table, and what we're going to do is look at various examples, and the slideshow here has some nice little pictures to kind of exemplify that. And we're going to look at each of the rules that will, each of the scenarios, if you will, that would cause you to be associated for purposes of the small business deduction. And again, that's what we're doing here. We're going to look at a scenario and try to determine, are you associated? Do you have to share the small business deduction? And that's a big deal, right? Because that could mean, if there's two companies and they have to share it, that's effectively a loss of the $500,000 that you can pay the lower corporate tax rate at. Instead, you'd have to have one company use all 500 or split it 250, 250, but you no longer have what would be a million between two companies that weren't associated. So let's look at the first scenario that causes us to be associated. So in the questions you'll see, it may ask you to refer to the section of the act that you're using to make your decision. So this one right here is A. This will be our first one. And in this example, so they're going to become, this is the most simple one. And we're just going to keep adding layers that get a little more complicated. So under A, this is one of the corporations controlled directly or indirectly in any manner whatever the other. So if we want to look at this simply, we're saying one corporation controls the other. That's the simple language. We got, it has to be corps because association is only for corps. Right? We talked about related, but here we're talking about association. We'll see in a moment how related can factor into that and how groups can factor into that. But the associated rules are only for corporations. The small business deduction is only for corporations. So that phrase, associated, is only for corps. So if you have one corp, like Company A, and it owns more than 50% of the votes of Company B, that means Company A controls Company B. So if one company controls another one, they are associated. So A and B are associated based on our first option, which is 256(1)(a). So that one's pretty straightforward. If one company is controlling another, they're associated. Now let's take a quick step back. Because you might say, well, why do we have to have all these complicated rules? Well, we have a small business deduction, right? We have that small business deduction, and it's 500K. Well, if I wanted to improve my odds here, I would just open up another corp and another corp and another corp, and I would split my company into as many corporations as I possibly could and just keep getting 500K over and over and over and over and over again. And I would never, ever, and nobody would ever pay the large corporation tax rate. I would just keep multiplying that. So these rules are in place in order to, if you did this, created all these corps, you would still, all of them would have to share 1/500. So these rules are meant to eliminate that duplicating that people could do over and over and over and over again. So if you've got a company that controls another one, those two are related. They have to share. Just looking at a question in the chat here from Aruni. And these two companies should be in the similar line of business, right? So for this purpose that we're talking about, the line of business, oops. Just answering this in the chat here. There we go. Okay. So the quick answer to that is the line of business of these corporations is irrelevant for purposes of the associated corporation rules. So this is a little different Then the topic we were talking about before about being in the same line of business was when say one company acquired another company. So there was a change in ownership, and then we were worried about how we could use those losses. In this case, we're talking about any scenario of companies. Are they associated for purposes of that small business deduction? Meaning, do these companies have to share it? So in this case, company A controls company B. They're considered for this purpose, basically kind of to be one company. They've got to share that small business limit. So that's scenario number one, or scenario letter A. The next one up is B. So it's all in the same section of the Act, 256.1, and this is B. Scenario B. In this case, both of the corporations were controlled directly or indirectly in any manner by the same person or group of persons. So you've got, what we're always looking at is two corporations, and are they associated? That's the question. Are they associated? So in this case, both of the corps are controlled by the same person or group of persons. That just simplifies it a little bit. This part where it says directly or indirectly in any manner, whatever, you're just going to see that every time. So if it's easier to read from the legalese, think about it this way. Both of the corporations are controlled by the same person or group of persons. So in this picture, both companies are controlled by Miss Smith. Through her shares, she owns more than 50 of B and more than 50 of A. So in other words, if I control two different companies, my companies are going to have to share the limit. And that's that scenario I was talking about is, why wouldn't I just open up 100 companies and just keep splitting that limit? I couldn't do that because I would be controlling all of them and they would have to share the limit. So that these association rules eliminate that possibility. Now, I mean, somebody could still try that, but on your corporate tax return, you have to report who the shareholders are. And once CRA got wise to what you were doing, they would come in and they would reassess you based on these association rules. So example number one company controls the other. Example number two, one person or group of persons controls A and B. So this could be, say, it could be Miss Smith and Mr. Smith, or maybe it's Mrs. Smith and Mr. Smith, whatever. But if these two are a group, and all they had to do to be a group was to own shares in the same company, then that also could be the situation. So remember that definition of group was very simple: two or more persons who own shares in a corp. Not a high bar to reach there to be considered a group. The question is, as a group, do you control? So controlled by the same person or group of persons. So if Mr. and Mrs. Smith own more than 50% of A and also own more than 50% of B, then A and B are related. So that's our second scenario that's going to get us associated for purpose of the Income Tax Act and the Small Business Deduction. Now, I should mention, so you're going to see again, you're going to see that directly or indirectly in any manner, whatever. You're going to see that over and over again in every example. We will indirectly, so directly means Mrs. Smith directly owns these shares of company A. Indirectly just means you might have layers of corporations. These setups can get really complicated, right? So you might own, you as the individual, the human here, might own this company, which owns this company, which owns this company. So it might be indirect ownership. You're way over here, there's a chain of companies coming to the end company we're looking at. So your ownership could be through intercorporate ownership. That's all they mean by indirectly. And we will look at how that works when we get into some examples. So let's add a little more complication. So this is C. Now, these blurbs here are right from the Income Tax Act. So they're in legalese income tax type speak here, but we'll break it down. And it's always going to be about the same things. Who's controlling what, who's in a group, that sort of thing. But what this one adds is a new wrinkle. And the new wrinkle is right here, what I'll call cross ownership. So we have one thing going on, but then we have, so in this case, Mrs. Smith owns company A, Mr. Smith owns company B, right? So that's different. Here, they were both owning or controlling the same company. In this case, Mr. Smith controls B and Mrs. Smith controls A. That alone would not cause the companies to be associated. One spouse can own a company and the other spouse can own a company, and that's fine. However, where this gets thrown off and gets kind of caught in these association rules is when there is a cross ownership. It doesn't have to crisscross like in this picture. So it's not crisscross, it's just cross. So any one of these arrows would be enough. So you just need Mr. Smith to have that cross ownership or Mrs. Smith to have that cross ownership. So let me, and the phrase they use here is not less than 25%. So if you own 25% or more cross ownership, these rules are going to kick in this type of scenario. So let's read the tax speak for this. It says each of the corporations was controlled by a person, and the person who so controlled one of the corporations was related. So now we're getting related for the first time, was related to the person who controlled the other, and that is an and. So we need both to be happening. Either, the language is very important, so you don't need crisscross, just cross. That's what the either means. Either of those persons owned, in respect of each corporation, not less than 25% of the issued shares of any class other than a specified class of the capital stock thereof. So it's a little bit of mumbo jumbo language. All you have to worry about here is that you have one person controlling one person controlling the other, and these two people are related. That's step one. But we also need step two. One of those people, or both, but at least one, has a cross ownership in one of those other companies. So Mr. Smith owns 25% or more of company A, he obviously owns 25% or more of B because he's controlling it, then A and B will be associated. So this is just a rule, right? The 25% is just a number that was selected in this rule as the kind of the cutoff. When you own enough of that company to cause these rules to kick in. So this can become very important in tax planning for how you're going to set up your companies. If there's a related group of companies, or people who are related that are going to have different companies, you want to be careful of what you might do in that setup that's going to have you fall into these rules. Now, you'd also have to consider, what we talked about before with the TOSI rules. If you're talking about how you're going to split income and this and that and everything else. So there's a lot of things to consider when you're planning that corporate structure and the share ownership. So in this case, if you're going to have these two different companies, you're going to want to make sure that the other spouse here is owning. You want to go with less than 25% to stay out of these rules. So another example with this, because we're doing spouses here, but again, we saw that large definition of related. A lot of people fall into this window, but it's the cross ownership that causes the issue. So in other words, this doesn't mean that, say, you and your sister have to share small business deduction limit if you both have a company. That's not what this is. But if you and your sister both have companies and your sister also owns, say, 30% of your company, now you've kind of fallen into this. So it's not simply that two relatives each have companies. It's not that easy. It's that cross ownership that does it, and it only needs to go in one direction. So this picture is not showing the absolute requirement. It's showing that it could go in one way, or it could go in the other, or it could go in both. But again, the language of this is clear that it's related persons and that either of those persons owned these proportions of the shares. So both things have to happen, and either person can do it. So these little words in the definitions are very important. Your ands versus your ors and all of that sort of stuff, and putting in the word either rather than leaving it out. All these, it might sound like a bunch of gobbledygook here, but each of these words is chosen very carefully and specifically. And again, this directly or indirectly does mean something. We'll get to that. But that's in every case. That doesn't change. So that's the third one. That's C. And unfortunately, we are going to get a little more complicated. We're going to keep adding wrinkles to this. So in our next one, this is D. In this one, we have one of the corporations was controlled. And I'm going to just leave this part out just so it's a bit simpler. So one of the corporations was controlled by a person. So we'll call that Mr. Go. He controls A. So, and that person is related to each member of a group. Each, right? Each means all. So he, Mr. Go, is related to each member of a group. And remember, to be a group, all you got to do is own shares in a company together. And that group controlled the other corporation. So here they are. This group is called Mrs. Go and Mr. Go's brother. So Mr. Go is related to Mrs. Go. He's also related to his brother, Mr. Go, under these tax rules. It says, and here's where the and comes in. And that person owned, in respect of the other corporation, again, it's that not less than 25% of the issued shares of any class other than a specified class. So Mr. Go is related to everybody in a group that controls. So it doesn't have to be every shareholder. It's just everyone in this group. This is the group, and this is what we would call a control group, because they hold together more than 50. This question or this example doesn't tell us exactly how much Mrs. Go or Mr. Go has, Mr. Go's brother, I should say, but together they have more than 50%. That's all that matters. So they form a control group. Mr. Go is related to every member, every, whatever way you want to put it, member of the control group. And here's where the and is. And we have this cross ownership of, the wording they use is not less than 25%. So you could also call that 25% or more. I prefer that language myself, but not less than 25% is what they use. Anybody have any? Feel free to jump in here if you guys have any questions.
I do have one.
Yes, go ahead.
If Mr. Go is not with her, like Mr. Go brother, but let's say her friend, and they own more than 50%, would that mean the two companies will not be related? Like associated, I mean.
Okay, so in your scenario, we still had Mr. Go over here.
Yeah, so we still have Mr. Go, we have Mrs. Go, but instead of Mr. Go brother, let's just say some friend.
It was just a friend, a family friend or something.
Yeah.
Yeah, so in that case, the companies would not be associated, if all other things being the same.
Yeah.
Because Mr. Go had to be related to each member, meaning all of the members, every member of the control group.
Okay.
So if it's Mrs. Go and a family friend who make up that more than 50%, they would be a group, and they would be a group that controls the company, because if they combine their votes, they can control the company. But Mr. Go is not related to everybody in that group under that scenario. So that would be the little piece that's missing. You have to have all of the elements in order. It has to be perfect in order for the rules to kick in. So likewise, if Mr. Go's cross ownership here, if everything was the same and the only thing that changed was Mr. Go's cross ownership, as I like to call it, was say 10%, then that wouldn't be enough to trigger these rules. So you can own some of that other company, just not passing that magical threshold of 1/4. So why don't we just keep on going and make it even more complicated? So the next one up here we have, so this is E. So again, these are just different paragraphs for each different scenario right out of the Income Tax Act. So in this case, we have, and before this, just ignore this 40. That should be exactly the same, this not less than 25. So I'm going to just put not less than 25. And I think it's the same way in the text example. If you guys looked at these in the textbook, it's just, it doesn't have to be 40. I think they were just trying to give an example and say, if it was 40, that would be over the threshold. But I think it's based on the way all these other ones were done, it's a little bit confusing. So just ignore that 40, and it's the same thing. Your threshold doesn't change. The threshold is always 25%. So 25% or more for the cross ownership. So in paragraph E here, we have each of the corporations was controlled directly or indirectly in any manner by a related group. So each of the corporations was controlled by a related group. So that's a related group, and that's a related group. So Mr. and Mrs. Brown are related to each other, and they own shares together in Company A. That makes them related, and also they own more than 50% together. So, and they have control. We have another group over here, which is Mr. Fortin and Mrs. Fortin. They are also a related group. They're married, I believe. You know, they could be brother and sister too. They would also be related. Whatever the relation is relevant as long as it qualifies. So they're related. So, and they control B because of the 50%. So they are also a related group, which also has control. So this is a related group. So we have each company having related groups. And so each company has a related group. Now on top of that, so this is kind of like the last one, but just add some more people. This is a related group, and this is a related group. And here's good. Each of the members of one of the related groups has to be related to all of the members of the other related group. And one or more person who are members of both related groups, either alone or together, owned in respect of each corporation not less than 25%, blah, 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 blah. So to try to simplify this, what we're saying is it's a little more complicated because there's more people involved. So you have a related group and a related group. They each have control of the companies. And each of the members in one of the groups is going to be related to all of the members in the other group. So it's that same relation across, just more people involved. And then either these two people together or just one of them alone, but obviously if it was one alone, that's enough to pass it, is going to own cross ownership here of not less than 25%. And that cross ownership could go either way, but it does not have to crisscross. So the way they've drawn these diagrams is not 100% consistent, particularly this one. Because if they were going to be consistent, they would also draw this crisscross. You don't have to crisscross, but it's one or the other, and it's still not less than 25. So I think they probably could have drawn that a little bit different in the text. These diagrams are right from the text. So I would just kind of optimize that a little bit by adding that and mentioning that it's not less than 25. Threshold does not change. We're just adding more people. So the more people get involved, you know, it seems to get a little more complicated. There's a little more that could be going on. So let's see. How are we doing for time? Okay, it's 6:38. Why don't we take a quick break And let's say we'll take like a, well, let's call it a 12-minute break. We'll come back at 6:50 and we'll go through an example, some examples from the text on these association rules. I'll post in the chat the question that we're going to have a look at, and I'll bring it up on the screen here. And then in about 12 minutes, we'll start to go through those. In the meantime, we'll take a quick break. All right, we're going to get started again. And so where we're going to pick up is here with problem or assignment problem, as they call them in the text, 14-4. So this is on page 717 of the text. So I want to have a look at some of these scenarios and see what we think about these. Now, you guys already have the solutions to this question, but we're going to go through and figure out, you know, how do we arrive at that solution? How do we get there? So I'm just going to do this, actually. Let's start. I'll do a little whiteboard, actually. Here we go. So now I can do some of my terrible scribbling here. So if you have the question in front of you there, the first one we've got up here is Mr. Bond owning 55% of Cernan Inc., then Cernan Inc. owning 40% of Barkso Limited, and then Mr. Bond owning 14% of Hacks Limited, which in turn owns 54% of the shares of Barkso Limited. On top of that, we have Mr. Bond's 10-year-old daughter owning 6% of the shares of Barkso. So this is going to be an example of a question where we looked at all of those where they said directly or indirectly. So here's where you can have a corp owning a corp owning a corp like that. So you end up with an indirect ownership. So we're going to see in this question how we handle that. But one of the things I like to do, when I get to one of these questions, I like to go ahead and just kind of sketch it out. So we've got our person here. We'll call this Mr. Bond. So Mr. Bond, he's going to own a portion of a company here. So it's 55%. And this company is called Cernan. Then Cernan owns 40%. So Cernan owns 40% of a company called Barkso. So again, when we say indirect ownership, we're showing Mr. Bond owning a portion of Cernan, which owns a portion of Barkso. So Mr. Bond has some indirect or potentially indirect control. If he can control one company, maybe he can control the other. So let's finish up our diagram here. And again, this whole thing is about control. If you're controlling more than one entity, those entities are likely to be associated for purposes of these rules. All right, so what else do we have? All right, so Mr. Bond owns 55% of Cernan. Cernan owns 40% of Barkso. Mr. Bond also owns, well, let's put this over here. He also owns 14% of another company, and that one's called Hacks. Now, Hacks, I'm gonna get this drawing all confusing now. Hacks also owns 54% of Barkso. So Hacks owns that percentage of Barkso. Mr. Bond owns that much of Cernan, that much of Hacks, and Cernan owns that much of Barkso. And here we have the actual human Mr. Bond. Now we also have, when it comes to Barkso, it says Mr. Bond's 10-year-old daughter owns 6% of the shares of Barkso. So another person's involved here, and we'll just call her the 10-year-old daughter. So she has some ownership, and that is 6%. Now, so here's my little messy drawing of how, so this is the way I like to approach these questions, is to just kind of sketch them out so that I can visually see what's going on. So we know that there's a few things going on here in relation to Barkso. And let me do this here. So if we follow this path, Mr. Bond owns 14% of Hacks, or controls the votes of 14%, but Hacks owns Barkso. So this red line that I'm showing here is a path of some indirect control. And indirect control matters. We also have a path where Mr. Bond owns Cernan, but that continues on as Cernan owns some of Barkso. So what do we do with these indirect manners of control? Well, there's also another one. I should mention the last one. This is also indirect. His 10-year-old daughter owns 6%. That's not him personally owning 6%. However, his 10-year-old daughter is not an adult. So those shares, for purpose of this calculation, will be deemed to be owned by him. So that 6% is going to go back to Mr. Bond. So in other words, it might as well say Mr. Bond. In other words, you can't just put your kids, put all these shares in the name of children under 18 in order to circumvent the rules. Any of your children, those are just going to be just the same as if you owned them yourself. So from a technical standpoint, it might be indirect ownership, but for purposes of this, that's the same. So that's why it always said over and over again, direct or indirect in any manner whatsoever. That's what we're talking about right here. This is a visual representation of that. So how do we, kind of tally all of that up? Well, that's what's shown there in the solution. And so we can, well, I'll draw some of this on here. So, 1 second. So here's how this breaks down. Let's start with the Cernin to Barksdale. So if we're looking at this Cernin to Barksdale here, so from Cernin to Barksdale, we have 55% of Cernin. 55% of Cernin means, or is equivalent to 100% control. What that means is anything over 50% is going to be over 100%, right? It doesn't matter. You don't need 99% of the votes in order to make the decisions. All you need is 51%. So if you have anything above 51% or anything above 50%, you have 100% control of this entity. Now, this entity in turn controls 40% of the votes of Barksdale. So because this number was greater than 50%, we are doing this basically 100% times, so 100% times 40%. So our Barksdale is 40%. So if we're going to do a little calculation here, and you guys already have this solution, but that's where the first number, the first 40% comes from. So in other words, Mr. Bond controls 40% of Barksdale. He controls it indirectly through Cernin. That's indirect number one. Indirect number two is in relation to hacks. So what I should have done, actually, hang on, let me get the eraser here. So this is all about Barksdale. So what we're talking about here is Mr. Bond and Barksdale. What is his level of control of Barksdale? So through Cernin, he's going to get 40% through this channel right here. Now through hacks, it's a little bit different. He only controls 14% of hacks, meaning he doesn't control that whole entity. However, we can still take that as the equivalent of being able to vote a portion of this 54%. So hacks has a controlling portion of Barksdale. So this 14%, we will be able to use that to vote 14% of Hacks's votes. So we would actually do out that math, right? 14% times 54. So if I do 0.14 times 54, I get 7.56. Is that what we have in our solution? Yeah, they rounded it up to 7.6. So let's call it 7.6. We'll round it up. So that equals 7.6. So it's the reason why we're doing this is because this 14, we don't have full control. Over here, we had full control. So 55 is as good as 100. 14 is not as good as 100. So for hacks, we're going to get 7.6%. Check the question here. Mr. Bond's daughter owns only 6% of the shares. That is less than 25%. So are we taking to account the 6% even though it is less than 25? Okay, so good question. So what we're looking at, step one here is, so we have a scenario in front of us and we're trying to determine who controls what. So that way we can determine which companies are related. So that's the objective here. So in order to do that, we need to see what Mr. Bond's relationship is with these companies. So we're going to start with the most complicated bit, which is what is Mr. Bond's relationship with Barkso, right? What is it with this company? The reason why we're looking at this company is because we already know Mr. Bond's, he controls Sarnen, that's no question. But if he controls Sarnen and Barkso, then those two will be associated. So we're trying to figure out where Mr. Bond stands with Barkso. Now, the other piece that's going to come in here is the daughter, right? So that's 6%. I'll say the source of that, the indirect source, is the daughter. So that's 6%. So we have the 40, the 7.6, and the 6. So that gives us 53.6. So we have passed our magical threshold. That means that Mr. Bond controls Barkso, and that this right here is Y. So he controls Barkso through that. That is what we talk about when we say indirect control. We have direct control with Mr. Bond to Sarnen through this 55%. So Mr. Bond controls Sarnen and Barkso. That means Sarnen and Barkso are going to be associated. So this is an example of indirect control being the reasoning for this. So they're both controlled by Mr. Bond. So that was our paragraph B example. Two companies being controlled by the same dude. And it's all because of that indirect ownership. Indirect being through other companies or through the daughter. So the trick here is that the daughter, because, if the daughter was 20, then that wouldn't matter. And as far as the question about the cross ownership and all of that, so it's nothing to do here with cross ownership. that hasn't come into play in this one. Yes, so the 7.6, that's simply 14% times 54%. The reason for that is because he owns 14% of Hacks. 14% gets him some Hacks votes, and then Hacks can vote on Barkso. Hacks has control of Barkso, so this gets him a portion of that, but it doesn't get him the same sort of situation as it is with Cernan. With Cernan, his 55% is as good as 100, so he gets the whole 40. Through Hacks, he's got a minority stake here, so he can only get the 14% of 54. So we just multiplied 0.14 times 54 to get what I believe was technically 7.56, and we rounded that up. So that's indirect control. That's what they meant. That's saying that controls in any way whatsoever, blah, blah, blah. That's what they meant by that every time. So it's not always just a simple, straight, one person owning shares. All right, let's clear all that off. And let's have a look at the next one. So the next one here, so this is B. We have Mr. Jones, Mr. Knight, and Mr. Long. So let's put these people on here. Jones, Knight, and Long. So these are three, oops. Jones, Knight, and Long. Important, they are unrelated. So these are just three different people. Not related, they're not brothers, spouses, in-laws, none of this stuff. So what's going on with them? We've got Mr. Jones owning 50% of the shares of a company called Annex, and 25% of the shares called Brex, of a company called Brex. We've got Mr. Knight owning some of Brex. Then we've got Mr. Long owning some of Annex and Brex. Well, let's put these companies in here. Might get some lines crisscrossing, but so we have Brex. So Mr. Knight, he owns half of Brex. What else do we know? Mr. Jones owns 25% of Brex, and Mr. Long owns 25% of Brex. So that's what's going on with Brex. Then we have another company called Annex. Mr. Jones, well, we might as well put Annex here. Probably not going to be a perfect placement, but that's fine. We'll put Annex here. Mr. Jones has 50% of Annex. So there he is. Mr. Jones, 50 of Annex, 25 of Brex. Mr. Knight has 50 of Brex. Mr. Long, well, he also has 50% of Annex. Okay, so Jones and Long own Annex. Knight, Jones, and Long own Brex. So what do we think about this one? Interesting. So if we have a look at this, well, you might notice right off the bat, there's definitely some, that magical 25 is getting hit here in a couple of spots. But do we have all the parameters we need for that to matter? I'm also seeing a lot of 50s, and we know that 50 is not enough to control something. We know that these people are unrelated, so the relations are not coming into play. And no matter why the relations would come into play is because if you're related to somebody else, then you're more likely to work together, right? If it's two spouses, their votes could be considered more like one vote, right? You've got 25, I've got 26, together we've got 51, we'll vote as a block. Easier to do if you're spouses versus being fully unrelated. So we got a lot of 50s on the board here. None of these people are related. None of them appear to have straight up control, direct control of any of these companies. There's no ownership between the companies, like the Annex doesn't own Brex, Brex doesn't own Annex. These are owned just by individuals. So the question, again, what we're trying to assess here is about the corporations. Are the corporations associated? So that's what we're ultimately trying to, like, individuals wouldn't be associated with each other. They could be related. But here, we're just trying to figure out who's going to share that small business deduction. So we got two corporations on the board. Are they associated? Now, we certainly do have control groups. We have groups like Mr. Jones and Mr. Knight and Mr. Long. They are all in a group because they all own shares of this company, Brex. Any combination of these people would also be a control group. But there's no relation here, and there's no relation to people between the companies. And so for example, Mr. Jones and Mr. Long are in a group. Together, Mr. Jones and Mr. Long definitely control Annex, right? They're 50-50 partners. So Mr. Jones and Mr. Long control Annex together, but neither of them has individual control. So they are a group that controls Annex, but they're not a group that controls Brex, because together they only have 25 and 25. So one of the possibilities here could have been that Mr. Jones and Mr. Long were in groups that both controlled the same company. But in this case, that doesn't pan out either, because ultimately together they're 50-50. So in this one, although it looks like there might be something going on, we've got nothing going on here. So you could have a question where you evaluate it and your answer is these companies are not associated. So that is the result of this one, not associated. So the closest thing, that we had here was the fact that Jones and Long controlled Annex. If they had controlled Brex, then maybe we would have had something there. But Mr. Jones and Mr. Long do not control Brex.
I have a
And
question.
Mr. Knight only owns Brex. So he's the only, like he doesn't have any ownership of Amex. Yeah, go ahead with your question.
So let's say if John and Long is own like 51% of Brex, do they associate it, or we have to to take a look at whether they are related to each other?
Yes. So if they, let's see here, if they, I'm gonna just share the slideshow again for a second. There we go. You guys should be seeing the slideshow now. So if you recall these, we started out with one company controlling another. Pretty straightforward. Then they're associated. Then we got to a single person or a group of persons controlling the directly or indirectly, but in this example, it's directly, the both companies. So under B, both of the corporations were controlled directly or indirectly, any manner, whatever, by the same person or group of persons. Under B, there was no requirement. Oops, I'm going to just change it. Yeah. So under B, there was no requirement for them to be related. So I'll just note that down. Oh, geez, I keep switching instead of writing. Sorry. Depend on. So no requirement to be related. The ones that kicked in about being related was when you got into the cross ownership situations. In this situation, this is one person controlling two different corps. So this is like you start a company, you start a flower shop, then you start another corporation, and it's a shoe store. Those two although they're totally different businesses, if you control both of them, own more than 50% of the voting shares, those two companies will be considered associated and they'll have to share the limit. It's kind of like you are getting that 500 limit once for yourself, not open up 100 different corps and you get it 100 times. Now that does extend, it's not in the drawing here, but it extends to also be, now I wrote Mr. Smith here, so maybe for sake of, showing this, let's say this was, this was somebody else. Forget Mr. Smith. This is Mrs. Jones. So if Mrs. Jones, together with Mrs. Smith, was owning more than 50% of B and more than 50% of A, then they would be associated. So those two people, might sound a little unfair, but it's the same thing. You can't, what we're trying to do here is eliminate the ability for you to just simply band together with someone else and open 100 companies. So that's the reason for that. So it does also extend to that unrelated person as well. So this one, B, is the one that we got the closest to in that question, but we didn't get all the way there because we just didn't have the control. We never had the more than 50. So the change would be the more than 50 would be the change that we were looking for in that question. Now, in the situations where they're related, we also need more than 50. So we need the control and then the cross ownership. So I guess my recommended approach is to, kind of map that out for yourself and think it through as to which paragraph, A, B, C, D, like that, which one's it gonna fit into, and kind of go carefully through the steps that way. And sometimes you will end up, like this part B, where it just doesn't pan out to be associated. So your answer can be not associated. Okay. I'll bring up the whiteboard again, clear this all off. So let's take a peek now at C and see what question or part C looks like. In C, we have Sam Scully owning 60% of Scully Inc. He's got a sister, so this is a related person, Susan Wilson, owning 80% of Wilson and 30% of Scully, and Sam also owns 10% of Wilson. All right, so let's draw it out here. So we've got Sam and we've got Susan. We've got Sam, this company here called Scully. So Sam owns 60% of Scully. His sister has a company. She owns 80% of Wilson. Now that, if we just stop there, and they are, I'll just put here siblings. So they are related. So related, check. Again, as per paragraph B there, the second potential scenario, we don't have to have related in order to have associated. We would have to have a shared control group between two corps, the same control group, but we do not have to have related. However, as we continue into paragraph C, D, E like that, related starts to play a role. So there's different potential scenarios. And of course, in A, it's simply one corp owns or controls the other corp. That one's as simple as it gets. So in this case, we do have related people. Now, if we started right here, and if this was it, so Sam owns 60 of Scully, Susan owns 80 of Wilson. If we stopped there, there would be no association. But there's more. We have cross ownership. So it says that Susan owns 30% of Scully. So there we go. We have our cross ownership. Susan to Scully, and we can see right there that we are over 25 or I mean, I gotta say over, yeah, that's it. Over 25% or over. So I should just to be clear here, let me just erase that. I'm gonna make sure I word this right. So this is 25% or more. That's the English that makes sense to me. 25% or more. So we have reached that plateau. We are 25% or more, check. So we've got related, check. 25% or more, check. Susan controls Wilson. Sam controls Scully. Check, check. It's the cross ownership that does it. So now we're also told in the question that Sam also owns 10% of Wilson. That is fully irrelevant. That doesn't matter. We don't need a crisscross. We only need it one way. So we can stop right here, and we already know that these guys are associated. Check. Now, if we want to finish drawing it, then yes, technically, I'll do a dashy line. This doesn't matter, but yes, Sam does happen to also own 10%. We didn't need it to go both ways, though. So this, if we go back to the PowerPoint for a second. This is based on C, right? We've got Mr. and Mrs. Smith here related, and we have the cross ownership. So each of the corporations are controlled by a person, and the person who controlled it is related to the person who controls the other. So each of them have to control, and then they have to be related. And either, so and either. So one or the other, just one of them also owns not less than 25%, i.e. 25% or more of the other company. So that is exactly the scenario we have here. Crisscross not required. So if we look at that solution that's provided with the text, it says Sam Scully, by virtue of his 60% ownership, controls Scully. A related person controls Wilson. Susan also owns more than 25% of Scully Inc. It shouldn't really word it that way, but anyways, you get the point. Given this, Scully Inc. and Wilson Inc. are associated. It's the corporations that are associated based under paragraph C. So when you answer your questions, you're going to want to just give a little support, but specifically mention which paragraph exactly, right? So it's section 256.1, but which paragraph? So paragraph C in this case. You want to support that. So in other words, if you were to have this scenario, and then you filed a corporate tax return, and you just said, forget about this. They'll never know who owns what. We're gonna use the full 500,000 for each company. Don't worry about it. Well, how would they know, right? If you said that, then you go under audit, and they review this situation and they reassess you. They're going to state in that reassessment that they're going to give you that specific reasoning. They're going to say that you are associated under ITA 256.1C, and that is their backup, and they're going to point exactly to the section of the Income Tax Act where you screwed up and didn't recognize it properly, right? So we want to understand exactly where we're getting that reference and that decision from the Income Tax Act. If we were going to argue in a different way, we would have to explain why we didn't fit under that part. So it could be explaining why you fit under one or don't fit under one. Now, the text goes on to also state that in addition, they would also be considered associated under B because both companies are controlled by the same group. So it's sufficient for me if you give one reason, but in this case, it is true that they also would be. So if you picked one or the other, that's good enough for me. But it is true in this case where Sam and Susan are, a group because they own shares in the same company. So Sam and Susan, through this ownership of the 60 and the 30, that makes them a group. As a group, and both companies are controlled by the same group. We also have the 10% and the 80%. So again, we didn't need this 10%, but it also does kick in the fact that together they control Wilson and together they control Scully. So technically speaking, yes, also this happens under B. Both companies controlled by the same group. So even if they weren't related, this would still kick in. It would still kick in that case because of the fact that they are a group. So if we look at, if we go back to the slideshow, and go back to B, again, it didn't show the person here, but if you have that group that are controlling together both of the companies, so both of the corporations were controlled directly or indirectly in any manner, whatever, by the same person or group of persons. So they are a group in that they both own some of each of those companies. So technically speaking, yeah, B also applies as well. Again, in a like exam situation or whatever, as long as you give me one of them, that's okay. We'll just be looking for that right answer and some support, but mention the exact paragraph that you used, and as long as that's one of them, then that's good enough. So needless to say, this stuff can get a little complicated, right? Yeah. So Sam's ownership of Wilson is only 10%, but they are still a group. They don't need each other to control the individual companies, but they are still by definition technically a group. So that's what kind of just passes that by. I mean, that one's kind of tough when you look at it that way, right? But that does fall under the rules. Let me see. Let's do, oh, it's 7:45. Let's do one more. What the heck? We'll do one more kind of convoluted one here. Let's do case D. So I'll read case D here. Oh, and by the way, I guess I could, boom, could start my video. Hi, it's a real person here. I usually just leave that off when I'm scribbling all over the screen so I don't get distracted. But what the heck, I'll put my face on here for a little bit. All right. So we're looking at D. This is Joan and Sarah Larch. So Joan and Sarah are sisters, so they're related. I'll scribble their names down here. There we go. So we've got Joan and we've got Sarah. What else do we know? Joan owns 100% of the shares of JL Inc. So 100% of JL Inc. And 31% of Meadow. Sarah owns 60 of SL, 40% her mother. Well, hopefully I'll draw it out okay here, but I'll just keep going. So we've got JL Inc. I'll put another company here. Meadow. I didn't spell it right, but you guys get the point. So 31. Her sister owns 60% of SL. So this is a different one. SL. I think I'm getting this right. The remaining 40%, I'll just put mom. So everybody here is related. Joan, Sarah, mom. Sarah also owns 39% of Meadow. So here's all these ownerships. What else do we know? The remaining, okay, so the remaining shares of Meadow. So what have we got here? We got 60, 70, so there's 30%. I'm gonna call this stranger. Stranger danger, we don't know who that person is, but they're unrelated. What else do we have? That's it. Okay, I think I wrote this out correctly. Let me double check. Joan, 100% of JL, 31% of Meadow. Sarah owns 60% of SL, 40% owned by the mom. Sarah also owns 39% of Meadow, and the remaining, what I'm going to say here should be by math, 30% of Meadow is a stranger, aka unrelated. So again, what we're trying to find out is, are these corporations related? That's all we care about. Or sorry, not related, associated. That's what we're trying to figure out. We got 3 corporations. Who's related to who? Who's going to have to share business limit? So we know that the Larch sisters are related. That's been told. And then we also have the mom here. So who's controlling what and what's going on? Let me read a little bit from the solution here, and we can kind of try to break this down. So the Larch sisters are clearly related. In addition, under ITA 256 1.5, a person who owns shares in two or more corporations shall be, as a shareholder of one of the corporations, deemed to be related to himself as a shareholder of the other corporation. Okay, so if we go back for a second to the slideshow, let's see. Get in here for a second. There was a, here it is. So I had gone ahead and skipped over a slide. So now we're going to come back to it because it wouldn't have meant anything to you before. But here under the deeming, whoops, come on, pen. Here under the deeming rules, right here, 256 1.5, a person is related to himself, herself, or itself. Okay. So what the heck does that mean? You are related to yourself. Put most simply. So we have himself, herself, this itself. The reason why we're using this, we're not talking about an animal or something, or trying to come up with something here. This is itself. The reason why we're using itself is a corporation, because a corporation can be a person. That's why we said him, her, or it. So this is individuals we're trying to represent here. And the itself is referring to a corporation. So a corporation is related to itself as well. And a corporation is a legal person. So they count as a person under the law. A corporation can go engage in a contract, carry on business, yada, yada. It just so happens that they are controlled or owned by, actual individuals, human beings. So that's why so this is just a funny little thing, but it can matter when you're breaking it down. You are related to yourself. So that's just a weird little rule there. We also covered in our questions 256.13, that was in the first question. Children under 18, shares are deemed to be owned by the parent. Deemed means I use the royal we, the Tax Act. We don't care about reality. I'm going to say it in a silly way, but that's it. We're saying, yeah, on paper, the kid owns the shares. But based on our rules, we will deem that the parent owns it. We don't care about what you put in reality, because that is a child. They're under the age of majority. That can't be owned by them for purposes of tax. Also, we talked earlier about 256 1.2. If you have companies in between, if you have control, you have 100% of the shares. If you don't have control, you prorate it. That's where we did that little bit of math and we got like 7.6%. That's what that was. So these are all these deeming rules and little weird rules that we have in here. Talked about groups and control. These are all these different rules. Related corporations. There was one more that I wanted to show. Here it is. So looks like I scribbled all over this slide, but I didn't say what it was about. So we're about to come to that. So there's one more, 256.2. What this says is that if A is associated with B and C is associated with B, then A and C will be deemed to be associated. In other words, even though the other rules wouldn't put A and C as associated, because they're each associated with another company, they will be deemed to be associated for purposes of tax with each other. Now, you know, we can talk about that one, but that's another. So that's not A, B, C, D, E like that. That's 256.2. That's a whole different one. So that's going to come up here as well. So that's 256.2. So let's hop back to the solution here for a second. So okay. So the Larch sisters are related. In addition, under 256.1.5, a person who owns shares in two or more corporations shall be, as a shareholder of one corporation, deemed to be related to himself as a shareholder of the other. So it's kind of like that person counts as two people related to themselves, so to speak. So given this, JL Inc. and Meadow Limited are associated under 256.1D. So under D, JL and Meadow are associated. This is because Joan Larch, well, here, let me go back. I should do this. I should go back to the little scribbly whiteboard thing here. Let's show you guys that while I try to explain here for you. Excuse me. So, JL Inc. and Meadow Limited. So JL and Meadow are going to be associated under D because Joan controls JL. That's through her 100%. And Joan and Sarah together through their 70%, right? The 31 and the 39 is 70. Together they control Meadow. And there's a cross ownership where Joan owns 25% or more of Meadow. So that's it. So JL and Meadow are associated based on D. And that's because D's when we get a little more complicated, we're talking about related groups. So we've got Joan and Sarah as a group. All you have to do to be a group is own shares in the same company. They're, in addition to that, they're a related group. So that's the first part. Now, the same concept falls with the other companies. So SL and Meadow are also associated under D. So Sarah owns 60% of SL, so Sarah controls SL. And she's a member of that same group, Sarah and Joan, that own the 70 of Meadow. And we have the cross ownership of more than 25% of the shares. So JL and Meadow are associated for the exact same reason that SL and Meadow are associated, which falls under D. Now, based on JL being associated with Meadow and SL being associated with Meadow, then technically speaking, under 256.2, they are all associated, meaning JL and SL are also associated. Now, the 256.2 is a little bit of a strange one in that I think it probably reads some stuff in your text there, maybe a little blurb about it, but you can kind of opt out of that. You're not going to actually have necessarily the full impact of the share because of that one. Let's see. I don't know if I can find a little blurb on that. Yeah, I don't know if I can find one. If I can see anything on there. Oh, there we are. Bottom of 691. Thanks, Grayson. Oh, sorry guys. Was I missing all these questions here? Let me catch up. Oh, sorry guys. Some of these questions were the previous one here. So all right, give me a second here. We'll catch up to that. Let's go to bottom of 691 just to finish what we're talking about here. Oh, one sec. I got too many things going on my screen. All right, here we go. Yes, association of a third. Association of a third corporation. So it says this provision indicates that two corporations, both of which are associated with a third corporation, are deemed, there's that word again, deemed to be associated with each other. This subsection also includes an election that can mitigate this rule. The third corporation can elect to not be associated with the other two corporations. A consequence of this is that the third corporation's annual business limit will be set at nil. However, the election will allow the other two corporations to be exempt from the association rules under 256.2. So you guys don't have to worry about that too much for the questions you're doing, just go ahead and state they're associated and here's why. But just so you know, that one, there's a little more to that where you can do an election. So what an election means is you're going to fill out some extra special paperwork that says, I know I fall under this rule, but I'm going to elect to do something else. So elections is something that we're going to talk about in this course, because sometimes the onus is on you. You've got to make the election, generally speaking, but you can elect to get a little bit of a different treatment than strictly by the book, as it were. So that's just a little bit of that whole page, the 691, kind of has all those little definitions and little weird items. So we've now kind of covered all of those through sample questions, so to speak, right? So that's what all that stuff is about. That's where that ties into these type of questions. So you might have somebody being associated under 256.2, but just as a side note, technically you could elect to get out of that as far as that goes. But for your questions, if it gets picked up under 256.2, mention that in your answer as well. Now, let's see here. If I pop back to the questions here, Grayson, your question was, if everything else was the same, except that Susan didn't own the 30% of Scully, would they be associated? Okay, so let's just see if I can just quickly scribble this back down here. So we had Sam. I'll go real fast here. So Sam owned 60% of Scully. He had a sister. So sis, that's Susan. She owned 80% of Wilson. And we had Sam owning 10%. And the other cross one here was 30%. And I think I have that kind of scribbled down there. Let's see. So Sam 60, Susan 80, 30% of Scully. That was Susan and Sam, 10 of Wilson. Okay. So we're back to where we're at. So sorry I missed those questions, guys. For some reason that didn't pop up for me. If everything else was the same, except that Susan didn't own the 30%. So let's do that scenario. Everything's the same, but the 30% is gone. Would they still be associated? So good question. What do we think? So we had Sam controlling Scully. We got a related person, Susan. She's controlling Wilson. So really, when we looked at this and they were associated, we had them associated because of that. There's a couple of reasons why we had them associated, right? Yeah. So when we were looking at it with the 30%, that was the cross ownership that got it done. But if you look at the solution there, it also said, in addition, they would also be considered associated under B, as both companies are. So here's the wording: both companies are controlled by the same group. In this case, the drawing we have here now, both companies are no longer controlled by the same group, is what I would say in this situation, because now, although that, to be clear, that when I talk about that crisscross is not required. However, it could cause other things to be happening. So once we had the 30% on its own, even if the 10 wasn't there, it's done, they're associated. But when we had the 30 and the 10, technically we were under B and C. In this case here, I don't think we have, in this case, I shouldn't say I don't think, I know they are not. So the answer at the end is they are not associated under this scenario that's on the screen right now, based on Grayson's question. And that is because the 10% is, whoops, I didn't erase. The 10% here that I keep erasing, stop. The 10% that we have here, this is not enough. That would have to be 25% or more. So this scenario, we can confidently say not associated. Did anybody have any other questions? I think I might have missed some other ones here. They were all right at the same time. What else did I have here? Oh, okay, so Patrick was replying. So this was the same question, right? Sam Scully. We're all talking about the same question here. So, but Sam Scully's ownership of Wilson is only 10%. So we still consider it as a group control. Okay, yeah, maybe I did actually reply to that one. Together they own 90% of Wilson. Yeah, so that's correct, Patrick. Yeah, so together they're still considered a control group. So that's fine. Yeah, so I think we did actually kind of address that as we're going along. So that is some examples of what you would need to be able to do. Read through the question, assess, and explain. So you guys have a sample solution there. So you can expect that. As far as State of the Union, let's have, before we call it a night here, let's have a quick State of the Union. Maybe I can, let's see here. I'll go to Brightspace and just share that maybe. There we go. So you guys should see Brightspace on the screen there right now. So just as a reminder, we have very quickly, we move along quite quickly here. So July 26th is the midterm date. So that is 1 day, or 1 week, sorry, not 1 day, 1 week from today. So we have one more class, that being on Wednesday before the midterm. Also, assignment number 2 is due in a few days. That's on July 22nd, so that's on Thursday. You guys have assignment number 2 that got put up on the weekend, late on Saturday. So you guys can, if you haven't already had a look at that, have a look at that. We've now covered most of chapter 13 and 14. That's what's going to be on assignment number 2. And that's the midterm. The midterm is going to be chapter 11, 12, 13, and 14. We also have, now there's the court case summary due date as well. So I might have to change that due date if we don't. I'll recheck the schedule. We might not have. I'm just trying to think here. 14. Oh, actually, I think I have. We'll probably, the prep for that will be Wednesday's class, I think is what I have. Let me just double check that, make sure I got that schedule, just so you guys know what's upcoming for that. I think that's what I had. Yeah, so July 21st, yeah. So we're going to talk about, that's right. So I don't need to change that date, sorry. So 29th, you know what, I might give you a couple extra days or something, but we're going to actually cover on the 21st. The class for the 21st will be the class this Wednesday that gives you what you need basically for that court case review. Now, I'm going to do that on Wednesday as a pre-recorded class, but that'll set you up for what you need for the court case. Now, I know that that's not going to be your focus. You guys, you know, just worry about getting ready for the exam and getting your assignment done. So basically what I'm going to do for Wednesday is I will release a pre-recorded class that sets you guys up for what you need to do for your court cases. So you guys can go through that. If you don't go through it on Wednesday the 21st, that's fine. But you'll have it for after the midterm. And I may go in there and just give you a few extra days to work on that. So I'll get back to you on a due date, but I'll probably give you a little more time. So don't worry about the court case, you know, for now. Focus on your assignment, focus on the exam. But since we do have a scheduled class for Wednesday, I will give you guys a pre-recorded class in case you want to do that on Wednesday. That will be available. But your main focus is right now, that's it. Assignment number 2 and getting prepped for the midterm. Now, in advance of that midterm, I will also give you guys some more feedback as to, you know, what to expect, all that sort of stuff. So I'll provide that to you well in advance of the midterm as well. And if you have any questions, or if you want to have a Zoom meeting with me personally or any of that stuff, feel free to reach out. I'm always happy to help. So any questions you might have as you're preparing for that exam, just go ahead and let me know. You know, try to get those questions to me, you know, this week if you can, or maybe Saturday on the latest, and I'll try to get any answers that I can back to you. I think that's about it for tonight. Did anybody have any last questions for today? Of course, I'll still be available. Any other questions you guys have through the week? All right. Well, if that's it for today, you guys have your merchant orders. You know what you need to work on. Any questions, let me know. And I will be in touch through Brightspace through the week. Thanks a lot, guys. Have a good night.